Financial ratios are crucial tools for analyzing a company's financial health, performance, and efficiency. As a finance student, understanding how to interpret these ratios is essential for your assignments and future career. In this video, we will guide you through the process of analyzing financial ratios, providing you with a comprehensive understanding of the importance and application. Understanding financial ratios. Financial ratios are derived from a company's financial statements, including the balance sheet, income statement, and cash flow statement. They help in assessing various aspects of a company's performance, such as profitability, liquidity, efficiency, and solvency. Here are some key financial ratios and how to analyze them. Number 1. Profitability ratios. Profitability ratios measure a company's ability to generate profit relative to its revenue, assets, or equity. Key profitability ratios include gross profit margin. This ratio indicates the percentage of revenue that exceeds the cost of goods sold. A higher ratio suggests better profitability. Net profit margin. This ratio shows the percentage of revenue remaining after all expenses. It reflects the company's overall profitability. Return on assets. Return on assets, or ROA, measures how efficiently a company uses its assets to generate profit. A higher ROA indicates more effective use of assets. Return on equity, or ROE. ROE evaluates the return generated on shareholders' investments. A higher ROE signifies efficient use of equity capital. 2. Liquidity ratios. Liquidity ratios assess a company's ability to meet its short-term obligations. Key liquidity ratios include current ratio. This ratio indicates the company's ability to cover its short-term liabilities with its short-term assets. A ratio above 1 is generally considered healthy. Quick ratio, also known as acid test ratio. It provides a more stringent measure of liquidity by excluding inventory from current assets. 3. Efficiency ratios. Efficiency ratios evaluate how effectively a company utilizes its assets and liabilities. Key efficiency ratios include inventory turnover ratio. This ratio measures how quickly inventory is sold and replaced over a period. A higher ratio indicates efficient inventory management. Accounts receivable turnover ratio. This ratio assesses how effectively a company collects its receivables. A higher ratio suggests efficient credit management. 4. Solvency ratios. Solvency ratios gauge a company's ability to meet its long-term obligations. Key solvency ratios include debt to equity ratio. This ratio compares a company's total debt to its shareholders' equity. A lower ratio indicates a lower risk of insolvency. Interest coverage ratio. This ratio measures a company's ability to cover its interest expenses with its earnings before interest and taxes. EBIT. A higher ratio indicates better debt servicing capability. How to analyze financial ratios. Step 1. Collect financial statements. Gather the company's financial statements, including the balance sheet, income statement, and cash flow statement. Step 2. Calculate ratios. Use the formulas provided to calculate the relevant financial ratios. Ensure you have accurate data for precise calculations. Step 3. Compare with industry benchmarks. Compare the calculated ratios with industry benchmarks or averages to gauge the company's performance relative to its peers. Step 4. Analyze trends. Examine the historical trend of the ratios over multiple periods to identify patterns and changes in the company's financial health. Step 5. Interpret results. Interpret the ratios in the context of the company's overall strategy, marketing conditions, and economic environment. Provide insights into the company's strengths and weaknesses. Conclusion. Analyzing financial ratios is an indispensable skill for finance students, enabling them to assess a company's financial performance comprehensively. By understanding and applying these ratios, you can provide valuable insights into a company's profitability, liquidity, efficiency, and solvency. If you need help with your finance assignments, our team at financehomework.help is here to assist you. Visit our ordering page to get professional help with your finance assignments.